Hey everyone, welcome back to the channel, your number one source for income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds. And today we're going to revisit the king, or it used to be the king maybe, QYLD, the Nasdaq 100 covered call ETF from Global X that's been around for over 9 years. And this used to be really the most popular income-oriented fund or covered call fund on the US stock market. But JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF, has recently surpassed QYLD in assets under management. It's over 8 billion now, whereas and climbing, by the way, whereas QYLD is really stagnating at about 7.7 right now as I'm filming this billion. So is QYLD dead? That is really the question I'm going to try to answer in this video. So we'll revisit QYLD's option strategy. We'll compare to JEPQ and other similar NASDAQ 100 covered call ETFs, because now QYLD does no longer have the monopoly, right? It used to be the undisputed king for a long time, but not anymore. There's, I would say, better option strategies that are currently outperforming in terms of total return QYLD with the same amount of yield. So let's quickly revisit this. And I know a lot of you might still have QYLD, maybe you're dripping it. Is QYLD dead? Should you swap it out? Should you sell it for these other NASDAQ 100 covered call ETFs that are coming out now on the US market? There's been an explosion of covered call ETFs. So let's check it out together right now. All right, everyone. So let's check out QYLD, the performance. I want to stick more with the performance compared to the other funds now and its competition, and why I think it's underperforming. If ever you want to learn more or you don't know how QYLD works, I already have 2 videos on that. Go on my YouTube channel's homepage. If you just search for QYLD, you'll get these 2 videos. These are the 2 important videos to see. This is where I cover QYLD, RYLD, and XYLD in detail, the option strategy. All 3 of them use the same one. And then in this one, I actually talk in depth to one of the main guys at Global X, the guy who's responsible for the income suite, about QYLD in detail. So check out those 2 videos. I'm not going to go over exactly how QYLD works, but basically, in short, guys, this one writes at the money calls on the entire portfolio. So essentially, you're giving up all the upside of the NASDAQ 100 for the biggest monthly premium, which they don't give it all out. They don't distribute the whole premium. They reinvest half of it approximately in the portfolio. So that's QYLD. So JEPQ, and by the way, just wanted to show you what I was talking about in the intro. You see that the assets is 7.76 billion. It's been around for 9 years, a really long time, guys. But this one, JEPQ, which is basically a twin brother, twin sister to JEPI. JEPI is S&P 500. JEPQ, this is pretty much the same option strategy as JEPI, but it's on the NASDAQ 100. Just passed 8 billion in AUM. If I could find it here. Here it is. So it's past QYLD in AUM, and it's only been around for about a year and a half. So obviously it's a lot more popular than QYLD, and it's not the only one. Right now you even have QQQY from Defiance ETFs, which is another one. And by the way, QYLD, you also from Global X, you also have QYLG, which is the same strategy, except they only write the covered calls. Same thing at the money calls, but only on 50% of the portfolio. So one thing I want to show you guys is really the performance, and why I think QYLD strategy is kind of outdated. It's not really an efficient option strategy anymore, in my opinion. So if you just look at the performance, okay, let's look at the 1-year performance here, 15.89. If you look at JEPQ's performance, we'll stick with the 1 year. It's 24.38. So it's a really, really big difference. If you just do comparison, QYLD versus JEPQ, your total return comparison here, and you see that it's really, JEPQ is really outperforming QYLD, but I would say by a lot, right? You see the numbers here, it's doing much better. So why is that? And why do I feel like QYLD and what I'm about to say for QYLD kind of, also is the same thing I could say for XYLD and RYLD. Why do I think it's outdated? Well, because basically this ETF is giving up all the upside of the NASDAQ 100. And I think long term, that's not really a good idea, right? So that is basically the key to why I'm thinking that. JP Morgan here, this one here, does not do that. They do out of the money calls. And by the way, if you're interested, I've also reviewed these ETFs in detail. I've had the portfolio. I had the pleasure of having Mr. Hamilton Rayner on the channel. who manages these ETF. He's this guy right here. He's the main portfolio manager. He's an awesome guy. And I did a great Q&A to talk about JEPI and JEPQ. So JEPI, they do out of the money calls, so they're capturing some of the upside. So when it comes to covered call ETFs, everyone, it's extremely important you understand what is the option strategy. If you're doing at the money calls on the whole portfolio, it means you're giving up all the upsides. This is not really a good strategy long term, I would say, because the NASDAQ 100, the S&P 500, the US economy, the US market, the stock market in general typically goes up over the long term. So you're giving up those gains. And another thing I want to point out is that the yield on QYLD, the distributions have been going down as well. That's just because of how it works. But you see that the distribution yield based on the last distribution is about 11% yield. On JEPQ, the yield is about the same. It's 11%. So this is really where, we're talking, I think, carburetor engine versus a fuel injection engine. You're getting more return, more total return with about the same amount of yield. So this is why I feel, JEPQ and, even QQQY does, QQQY is in a whole other ball game of its own. But if you actually compare, by the way, QQQY to JEPQ, the total return, it's actually very, very, very close, right? I just want to show you that. It's here's QQQY versus JEPQ, very, very, very close. So, if you do QQQY versus QYLD, we'll just stick with QYLD. You'll see that QYLD is once again underperforming, but, QQQY has only been around for 3-4 months. The real important one is, I would say, the JEPQ comparison. Like we saw before, it's underperforming. It's underperforming a lot, right? So, why is that? Well, that's because the market or the NASDAQ goes up more than it stays flat or goes down. That's really why, in my opinion, right? Actually, it's not a matter of opinion. That's just how it goes. So very interestingly, QYLG does the same thing, but only on half the portfolio. So it only gives up half the upside, and it's actually performing a lot better than QYLD. It makes sense, right? So if you just do QYLD versus QYLG, you see QYLG is outperforming, and QYLG is, I just checked, you could check yourself, but it's performing a little bit less to JEPQ. JEPQ is still outperforming QYLG, but not by a lot. It's actually very, very, I would say, similar. So to me, the better strategy is where you're doing the covered calls, you're not doing it on the whole thing, right? So you could capture some of that NASDAQ upside. Something like QYLG is better, but unfortunately, they do like QYLD where they only give out half the premium. So the problem with QYLG is that the yield is very low. So if, what Global X could actually do to fix the problem is, do a QYLG that gives out the whole premium, and you'll get about 10-11% yield, and you'll get more total return. That's just a suggestion. And by the way, Global X is managed by Murray Asset Management. Global X is United States, right? They do US listed funds. But there's Horizons, which is also managed by Murray Asset Management. So Horizons ETFs, in case you didn't know, it's kind of like the Global X of Canada. And they also have a NASDAQ 100 covered call ETF, QQCC, which is also outperforming QYLD by a lot. It actually has a very similar performance to QYLG, JEPQ as well. 1 year you see 24.86. You got to ignore the long term, by the way, on QQCC, because it's a long story. I don't want to get into it now, but this ETF used to be something completely different. It was not the NASDAQ, so it only really the 1 year performance is accurate, not the 10-year or the since inception. So 24% here, very, very similar. That's in 1 year, very similar to JEPQ, right? So if only, Global X would do something like a QQCC, it would be so much better. So unfortunately, I do think, QYLD is outdated. Why would anyone ever get QYLD, you're asking? Well, QYLD is really for people, in my opinion, who think the NASDAQ will just never go up. If you're the ultimate pessimist, you think the NASDAQ's not going to go up, that's when you would buy something like QYLD. So I know many of you probably have QYLD and RYLD and XYLD. The next question you might be asking, well, listen, should I sell it? Should I just, in case you're at a loss, should I take the loss and sell it for a JEPQ? Another thing I want to mention, even the management fee, 35 basis points versus 60 basis points, it's less with JEPQ, with the JP Morgan one. So it's a hard question to answer. Everyone needs to make their own decision, but I honestly feel, and I'm pretty sure that long-term, performance-wise, JEPQ, QQQY, or even QQCC, they're all going to outperform QYLD because I think, the NASDAQ 100 in the long term will go up, will be more positive than negative. So I think that it's really something you should consider, especially if you're a long-term investor. If you're investing in QYLD or XYLD or RYLD tactically, I would imagine for short term, let's say, because it's almost like shorting the market. It's almost buying QYLD is almost like I'm going to short the NASDAQ 100. It's almost the same thing if you think about it, because you don't think it's going to go up. That's why someone would get QYLD. So I think it's outdated. I think for most people watching, it would probably be a good idea. I know it sucks taking losses, especially in a registered account. That's something you need to decide. But I think over the long term, you will probably be better off with QYLD because every other NASDAQ 100 covered call ETF is beating it at the moment, and the underlying commonality is that they're doing covered calls on not as much on the portfolio, or the calls are out of the money, which means you're capturing some upside. When you have good indexes and good funds and good economies, you always want to leave yourself room for upside. I know we're income investors and we are, no matter what, giving up some upside with a covered call ETF, but you don't want to give up all of it, especially because you're going to get the same yield. So even if you're living off of the yield, you're still better off, in my opinion, with a JEPQ, for example, because it's about the same yield as QYLD anyway. So hopefully this video was informative for you. I just wanted to give you an update on QYLD and why it's really, it's pretty obvious now why it's lagging in terms of AUM. It's not really growing, whereas JEPQ is just flying out of the gate. And even more innovative things like QQQY are growing very, very quickly. You're at 255 million just 3 months out. But this one is definitely going to be the one to beat now in terms of the NASDAQ 100, JEPI as well for the S&P 500. So and I wish Global X would just change the strategy of, maybe they won't change QYLD because it's been around for such a long time, but I wish they would change QYLG to just give out the whole income. You're covering 50% of the portfolio. There's no need to, give us the flexibility of reinvesting how much we want with our yield. That would be my message to Global X in case they're watching. But I'm not going to say QYLD is a bad fund. It's just the way it's designed. It's a set in stone approach, I think, it's a bit outdated. So leave me a thumbs up if this video was informative for you. And again, if you're thinking of swapping it, think about it. It's not that QYLD is just a disastrous fund, but most probably if you're in it for another 5, 10, 15, 20 years, it could be beneficial for you to, even if you have to take a loss, swap it out. So that's it. See you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the Ultimate DIY Investing Package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or companion or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And Passive, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of Passive is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram where you could follow us or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.